What's going on, everybody? TG here, back with another video. We got ourselves a big earnings week coming up. Today, obviously, we had the day off thanks to President's Day. But tomorrow we come back, and we come back big. Before the market opens, we hear from PLTR Technologies. As you guys know, we've been following PLTR for a while. I made a couple videos on PLTR, had a couple positions in PLTR over time. But I think Palantir is set up pretty well. I think it's had a pretty nice run up, as you guys can clearly see. We got out a while ago. We locked in our profits on Palantir. Did a couple put credit spreads, made a couple $100 and got out. The only thing that worries me a little bit on Palantir is their market cap. It's over 62 billion, which is pretty high for a company that doesn't do that much in revenue and or profit. But obviously, Palantir is the future. It's very forward looking. So I could see them doing pretty well with earnings, but I'm not expecting a big move with earnings just for this fact that it has run up so much recently. And it's not really based off earnings as of right now. It's more based on new contracts and news to drive this stock price up. So not too much concern with Palantir. It's a great company, and I'll continue to watch it. And if it goes back into the 20s, obviously I'm going to pick up a lot more Palantir. But moving on, CVS. I think CVS is going to have a great quarter. Unfortunately, long term, I don't like CVS just for the fact that Amazon is really coming for their heads, and I think Amazon wins that fight. I'm going to be honest with you, I think Amazon wins that fight. So I expect them to have a good quarter, though. They're still very, very reliable right now, and, people use them a lot. So I like CVS, but, nothing really else that entertaining on Tuesday. But Wednesday is a really, really big day. Before the open, we hear from Shopify, and Shopify has been absolutely killing it. This entire year since COVID, it is up so much. As you guys can clearly see, that thing was down in the dumps at about $330, and now it's sitting at about almost $1,500. I like Shopify, but what I don't like about it is its PE ratio. It is extremely high. It's got a market capitalization of 180 billion, and if we look at Shopify's stock and their earnings, it's not justified their price as of right now. Like I said, I think it's still a great growth stock, but I want this thing to cool down. I think it's got to prove itself with these earnings quarters, to really prove itself where it belongs. I mean, revenue last quarter only 764 million with a net income of only 191 million. Now, that's a really good quarter if you're not talking about a company that is valued at $178 billion, with a PE ratio of 928. That's a lot. That worries me, that a PE ratio of that great of size, especially when you're competing against a lot. It's one thing with Tesla. Some people can justify that. But with Shopify, there's a ton of competition. I mean, you're dealing against Amazon, Etsy, Walmart, Target. You're dealing with a lot. And I know they are helping small businesses out, but you got to realize Amazon's been helping small business out for a while. Facebook Marketplace, there's a lot of competition in that field. So to be valued at that much, they better really prove it this earnings quarter, and I'm going to be watching closely for that. Another big thing is after the close is Fastly. You guys know I've covered Fastly for a little bit. I actually really like Fastly. I think what they do is amazing. And I'm expecting actually a pretty good earnings quarter. They really dropped the ball last time when they revised their guidance. If you guys remember that, if we look at it a couple months ago, right about here in October, they announced that guidance isn't going to be as big as they thought, and bam, the stock got absolutely murked. From $130 down to $63. That's almost a 50% drop in just a couple weeks. Not even, literally about a week. Exactly 1 week, and that can happen. So I think Fast is stepping up. I think that at a $12.4 billion market cap, they're poised pretty well, and I think they're going to have a pretty good earnings quarter. I really like Fastly. I think what they're doing is great, and they help out a lot of companies, and a lot of companies have been using Fastly. So took a bit of a hit on Friday, but I think it's going to roar back, and I would like to see the stock a little bit higher. But I mean, looking at pure earnings, they're still not profitable yet, and that's obviously an issue. They do have a bit of cash on hand, which is always nice, and their revenue is increasing, but they got to get their net revenue up a little bit more, and get to profitability. They get to profitability, this company is going to absolutely fly. So I'll continue to watch that and see how that goes. But I like Fastly. I think Fastly's solid. We also hear from TLRY, the biggest cannabis company. See how they're doing. That company's just had an absolute wild ride recently, up hundreds of percent, down 50% on Thursday. Just crazy stuff going on. And then TWLO as well. TWLO has been getting a lot of attention, and I think TWLO is going to do pretty solid. TWLO is one of those companies where, long term they're going to continue to grow and grow and grow, and it's had a heck of a run. I mean, it has had a heck of a run since being down in the 60s in March to being $440 now. Just an incredible run, and they're cloud-based platform services and all that stuff. Really communication with the cloud. That's basically what a lot of these companies are doing, and it's working out for them well. So we'll hear about Marathon Oil as well. I wonder how that's going to play out with oil prices, increasing a lot. I still don't see a future in oil, and I wouldn't invest in oils, to be honest. I think with the changing EV culture, it's just not really worth it investing in oil. Well, there's just better plays out there to make, honestly, better plays to make some good money. So we go to Thursday. That's probably the biggest day, I'd have to say. You hear from Walmart. Walmart's solid, just absolutely solid. I just got back from Walmart 20 minutes ago. So it's solid. It's competing with Amazon. It's actually doing pretty well, but they have their brick and mortar stores. Their profitability is not much, but they bring in a crap ton of revenue, and they're always going to be here, and they're going to stay here, and they're not going anywhere at all. So own Walmart. I like it. Barrick's gold. You want to invest in gold. I think they're going to have a decent quarter, but it's gold, so don't expect any big moves. But after the close, we hear from Roku and Trade Desk, and these are probably the two ones that I'm going to be looking at most closely. Roku has just had, I've never seen a run like something like Roku has had. They're cutting the cord for cable, and that's huge. It's the future, and that's why the freaking stock is up. The amount it's up, from March, it's up, 635%. But their last earnings was really good. I mean, they're profitable, which is huge. Look at that revenue, 455 or 451 million. Obviously, market cap is only 59 billion, so it's not too bad. We'll have to see what this does. I think that it's going to be pretty big. I think this is going to be around 600 at least. But we'll have to see. But I like Roku. I think Roku long term is solid, very solid play. And so you can't be wrong owning it long term. Trade Desk, they're doing really good with their advertisements, because advertisement business is huge, as you guys know. Look at Google's last quarter. Ads are paying everything. You look at Amazon as well. Their ad sector is just crazy. So Trade Desk is what thrives with that, and that's why the stock is, again, another one of these companies that is up 500% from where it was in March. Just incredible growth. And, market cap of only 40 billion, P ratio of 296. Yeah, it's a little high, but I mean, look at the numbers they're doing. They're continuing to grow. 112% year over year is huge, and 31% year over year revenue growth is huge as well. So a lot of upside that these have had. How much more is the question? We'll have to see. Last earnings quarter, it absolutely spiked. I mean, this thing absolutely jumped. So we'll have to keep watching it and see how everything plays out. But I think this is a solid pick. I think Trade Desk and advertisements are here to stay, and they're fine. They're fine and positioned very well. PE ratio is obviously a little bit of a worry, but overall, this company is amazing, and there's a lot to look forward to. So, those are really about the big ones. I like to just only cover the big ones and ones that I know and ones I'm going to be watching. So like I said, tomorrow we have Palantir. Wednesday we have Shopify, Fastly, TLRY, and TWLO, and maybe Marathon Oil. And Thursday we got Walmart, Roku, and Trade Desk. So have those on your watch. Overall, I'm very bullish on them, and I think they'll all do pretty well. Fastly, it's up in the air how the stock is going to react. Same as Shopify. I mean, it's like I said, the PE ratio is a big concern, and the competition is a big concern. But overall, expect a very strong quarter, with Black Friday and Cyber Monday and holiday seasons and all that. I expect a big quarter from them. Definitely their biggest yet. And we'll just see what happens with the other ones. But, let me know what you guys are thinking to invest in. Like and subscribe, of course, helps out a ton. And I'll see you guys next video tomorrow. Have a wonderful day, guys. Bye.